So we now come on to our panel session, but we do have a guest joining us. So before we get the other speakers on stage again, I'd just like to introduce our guest panelist. So he's currently head of payments at HelloFresh, and he's going to have to explain to us what it is. But to me, what I've already found out is it's very much digital, but very direct and face-to-face at the same time. He's very much focused on recurring payments, so that's another key point that we have to make him talk about a little bit more. So please welcome Jake Hershman, who's head of payments for HelloFresh. Jake. At the same time, please, other speakers, if you can join us for the panel. After you, Jake. Thank you. Seat. Fantastic. So, Jake, I guess since everyone else had a little presentation to do and you didn't, could you give us a brief introduction to yourself and also to HelloFresh?
Sure. So my name is Jake Hershman. I lead payments at HelloFresh in the U.S. and Canada. We work very closely with our partners here in Berlin, as our payments platform for processing payments is global in nature. We manage relationships with gateways, acquirers, networks, really with the focus on recurring payments. So we are a weekly subscription service in 11 countries to date, where we ship tangible, perishable boxes of food. So the polar opposite of a high-risk digital merchant or an intangible software product, something that requires real fulfillment, just-in-time demand forecasting, and delivery physically to your door.
Fantastic. And I guess out of that, we get to some real kind of needs. I mean, your business, it's dealing with fresh food, it's totally transacted online, but what would you say are your biggest kind of needs and requirements as a digital merchant?
Yeah, so we're hyper-focused on acceptance rates, and so costs are certainly important, and for a business of our size, definitely something we're always considering. Specifically, our recurring acceptance rates. So we dive deep into the authorization requests, into the ISO messaging, looking at performance across bins, by providers, by acquirers. We're always looking for a local acquiring wherever we can go, and as much data as we can possibly find from the entire stack of the platform.
Mm-hmm. Would you recognize similar sorts of issues on your side, Manja, based on the experience that you've had? I mean, obviously it's more on a digital publication side, but would you say that the needs of a digital publication are somewhat similar to what Jake was describing there?
Yeah, sure. You need to focus on your consumer base first. You need to look in what your consumers want, and then you bundle up the products on their willingness to accept your products. So surely you need to offer diverse products, diverse price strategies. You need to look into their consumer behavior. You need to offer latest trends. And so, yeah, you definitely need to catch up on that.
Yeah. And Anna, from your side, you're obviously taking the marketplace as your key kind of target. What types of organizations? What are the marketplaces that you're dealing with there? Are they, somewhat similar to Jake's model, completely different probably, but what types of business are those?
So a very wide variety actually. Most of them are early stage businesses, so they're only just starting out. They've got a fantastic idea. They know what they want to do, but they don't know payments. And they really need somebody to just take that away from them and explain to them, look, this is how payments can work for you, and this is how payments can do exactly what you want them to do. And in terms of industry, it really varies. So we're seeing gig economy platforms that connect construction workers that are looking for a 1 week, 2 week gig to people who are looking for those construction workers. Then we're working with an app that is a gig economy app in the parking space. So if you are looking for a parking space in the city center of Berlin today, and you don't fancy driving around looking for that space over and over again, and somebody else is parked there and knows they'll be leaving in 30 minutes, they can put out that parking space on the app. You can connect, and then the person who has the parking space right now will commit to waiting for you until you arrive so that you can take that slot. So it's really quite funny. You're not even purchasing the actual parking ticket. You're just paying for that person's time to wait for you and pass on that parking slot to you. So yeah, we're seeing a lot of really, really fun examples, interesting examples, and examples where really entrepreneurs are trying to come up with ways of exploiting things that have previously not been exploited.
Right. I mean, I think when we spoke before, you also said that you have to do quite a lot of configuration work. So it sounds like your solution is very much personalized to some degree to the specific needs of that marketplace. Is that true? Could you talk about that a bit?
Absolutely. I mean, obviously, if what the client is looking for is a bog standard marketplace solution with sellers here, buyers there, there's not much we need to do, and we can offer that out of the box. But often clients want to do something slightly different because they want to stand out. They want to have that competitive edge. And so we're working with a fashion marketplace that wants to reward influencers for driving sales to their marketplace. And so they want to split the payment not just between the marketplace and the merchant. They want to split it between the marketplace, the merchant, and the influencer. And so they came to us with that requirement. And we said, look, guys, that's not a problem because we will just model the players within your ecosystem in our payments ecosystem and create the role of an influencer for you that has slightly different permissions than the role of a merchant. And that way we can achieve the exact functionality you need us to achieve. And critically, I think this is really important, we don't do this by putting in custom development work. We do this by taking those levers that we already have and configuring things, as in our ops and our product team will configure things, which means that timelines are short, there are no setup costs, and you can have the exact solution that you need as a platform business.
Interesting. Christophe, I mean, your as far as I understood anyway, your solution is addressing that same sort of need. Do you take the same approach? Would you agree with what
slightly different approach than we have because we work as a white label solution and we work for gateways, for acquirers that wants to offer marketplace solution to their merchants. Okay? So at the end, this is about marketplace, okay, but this is not a direct connection that we have with merchant. We do that for and with the gateway or the acquirers that wants to offer marketplace flow of payment and marketplace solution to their own merchant. So in terms of verticals, in a way, the marketplace that we have today are less pure player. I believe you have a lot of pure player that comes to see you. The marketplace that we work for are mainly the retailers that used to be with the banks and the acquirers and the gateway for a long time, and that wants to become a marketplace. So we have a travel industry, we have a car manufacturer, we have clothes, we have food delivery a little bit, but that's more a former retailer that wants to become marketplace. Yeah. That's what we do.
Would you personalize your solution to the needs of a specific acquirer or
know, so PSP? Most of acquirers and gateway, they already do a lot of things in payments. So I cannot come with my own API and say, okay, I'm not going to change anything. I need to adapt to what already exists with this specific gateway or acquirers. Some of them know how to do KYC. Okay, I will let them do. Some of them are acquirers, so I will let them collect the funds. Some of them are even payment institution. So they might not need my own payment institution license, and so on. So we need to adapt and customize the final setup with what the gateway and the acquirers already have. That's what we do.
Absolutely. Mike, I know you're pretty much stuck in the middle between merchants, between payment providers, PSPs, acquirers, etc. How do you handle those competing needs? Are they competing or are they all very complementary?
Yeah, I think so. So you say stuck in the middle. I think we're sitting in a very privileged position of being able to sort of partner and make sure we're not providing friction for everything that everyone else is trying to achieve and their goals. So I think it's about trying to make that, empower them to do what they want to do with the less friction as possible, balancing that out. So not only connecting all of our issuers to all of our acquiring partners and domestic schemes we're working with, but yeah, making sure that we're not putting barriers in the way of acceptance and experiences, and make sure these people can focus on that experience end of the day for the consumers.
And would you say that consumer experience is getting better? I mean, you took us through the digital consumer journey, but would you say it's getting better, or is it, with too many competing ways to pay out there, is it just getting a little bit confusing? What's your...
I think there's still that fragmentation that the solutions that are coming out now are trying to fix, if you like, around connecting the different channels together. But I think what we're seeing is that the consumers are demanding that experience to be as good as possible. So it's almost, if you don't get that right, if you don't fix the problem that's there, then there's that impact of loss of customers, loss of volume. So I think it will be fixed, and that's in the process.
Yeah, Jake, you were sitting through the presentations there, and we had some very nice positive messages about how payments aren't just a pain factor. They can be a real kind of positive part of the experience. What's your view of that in HelloFresh? How are you finding that? Is payments a pain issue, or is it a little bit better?
Maybe it was a pain issue until I came along. I got a lot better now. But in all seriousness, we take payments very seriously, and it's very much a core part of our business. What I like to say to individuals when I speak to them sometimes is that when you are a subscription recurring business at your core, at a pure player e-commerce, payments is often your business and is so critical to your business. And so our payments organization actually in the US was recently moved under the growth and retention arm of the business, really with the hyper focus on customer retention. So we can look at all payment-related declines and all customer journeys in really two buckets, ones that churn voluntarily and ones that churn involuntarily. And if we look at customers that churn involuntarily, well, the biggest portion of that is oftentimes payment declines. And so for us, reducing that as a proportion of our overall customer base is critical. That's just capturing revenues that we are potentially losing. Payments also can be a strategic lever for us to grow, to include more customers, to offer localized forms of payment, to offer Apple Pay and the other pays and the wallets and the buttons and the checkouts. Obviously there's a balance with avoiding that NASCAR effect or displaying localized methods of payments in a more dynamic way. But we strive to offer any form of payment where our customers are and what they're willing to accept and what they're looking for us to accept, all with the goal to better serve our customers and further grow our business.
Interesting. I think the whole consumer experience is absolutely key. And Manja, when we listened to you and the detailed work that you'd done on consumer responses, I just wanted to kind of ask about how you think consumers see payments, because at the end of the day, a lot of people here are very much involved with the payments industry, but if I'm a consumer in the street, I think I might find it a little bit confusing. There are so many different ways to pay for stuff these days. Can you be bothered having to work out, which is your preferred method?
You need to experiment with that. You just need to test what payment method works best, or in my point of view, you need to find out what business model in terms of payment works for your consumers. You can start using a very small amount from your consumer base, and you can put some tests on them, like A/B testings on them, and then you, if one of those tests works out, then you apply those payment methods or business models to a bigger base. That's how you experiment in digital consumer behavior. And the good thing is that you have analytics tools that help you to find out. You're not alone. You have probably loads of your coworkers that have experience in analytics and CRM management. So you can gather around with your colleagues and write a test plan. And then once you have the results, then you start applying those to your big consumer base, and that's how you would usually do it. And I recommend highly to do it that way.
I mean, when you look at micropayments, would you say that there's one vehicle, as in mobile, is going to be more attractive than kind of desktop? Did you get down to that level? You might have mentioned, I think, but
no, because previous studies have not limited micropayments to a specific device nor to a specific amount, and I did not want it to limit my studies on that. Because micropayments can have a variety of options. They can be like paper article, they can be day passes, they can be like access to specific content, for example, to news archives. So I really wanted to research on the basics of the micropayments before someone else maybe touches on this topic to deep dive into what actually constitutes a micropayment. So this is work left to do in some future research studies to find out whether there is some specific needs from customers for mobile micropayments or on a specific amount that constitutes a micropayment. Yeah.
And would you say that traditional payment schemes, really set up for micropayments today, based on your experience?
Well, yes and no. As you have experienced from my presentation, the newspaper industry is behind that trend, but there are some industries that have been experimenting with micropayments. From the news industry, there are some companies that work with micropayments already. For example, I can name an example from the Netherlands called Blendel, where you can buy single articles from various news aggregators already. So it's coming, but it still has not arrived as a big trend. We'll see what the future brings.
Yeah, absolutely. Mike, on your side, and obviously you're coming from a big network of networks, as you described it to me. Well, what sort of view would Discover take on micropayments? Do you see it as a target area for growth?
I would say it's just another area we need to make sure we're empowering people to be able to support. So if you look at a micropayment in itself, you could simplify that to say, why should that be any different than any other type of payment that as a network we're accepting, we're empowering. So I think our job then is to make sure that all the structure and regulatory associations with that type of a payment are taken care of, and then we've also given the flexibility to our partners downstream to deliver upon the specifics of micropayments in that environment. So that's kind of the roles I see we'd have to play in supporting.
Right. And would you, get to the sort of segmented focus? Do you identify marketplaces as an area of focus, for example, for Discover? Is that a potential growth opportunity as well?
Yeah, for sure. I think we're always constantly taking a look at the trends and what's happening. The statistics about the volume shift just dictate that needs to be something that we have focus on, and I'm sure we'll need to be agile with where we switch focus to and share resource in future. So yeah, for sure.
Okay. And I know, when we spoke previously, you talked about, all types of payment. I come from an industry which is probably more focused on debit and credit, but, for your customers, can you take us into a bit more of the other types of payments that we're likely to be dealing with?
Absolutely. Broadly speaking, we do mainly see card payments in, so be it debit or credit, and then payments in via bank transfer. So be it me as a buyer paying a merchant by initiating a bank transfer in my online banking portal, or be it somebody else topping up their own e-money account before then potentially paying a merchant using an A2A transaction. So in terms of kind of the split, I would say it's 50-50, but what we're very much looking forward to is starting to work with a PISP and looking into how we can make that pay by bank experience even more frictionless and actually in product, rather than you having to leave the product, go into your online banking, initiate that payment, go back to the product. So that's something we're looking into. And I guess in terms of micropayments, we do have some prospects that are asking for micropayments, or recurring payments is not a problem, but micropayments can be tricky from a cost point of view, right? Because you do have a flat fee for every single transaction of 20p or whatever it is, and if the transactions that you're making are worth £1, £5, £3, there's that difficulty. And so more often than not, it's about how can we find a good trade-off, or how can we help the client find a good trade-off between not impacting UX by, say, bundling payments, but at the same time making payments work from a cost perspective. So in that regard, actually, e-money infrastructure and A2A transactions can be quite interesting, because you load money into your wallet, and then once it's loaded, you can send funds through peer-to-peer transactions or A2A transactions at zero cost. But then again, do I really, as a consumer, want to preload funds into a stored wallet account? Not really. I want to get started straight away. So it's kind of maneuvering those trade-offs and finding the best solutions.
Yeah, I mean, e-money, I think, is a model probably from, 20 years back, that at the time probably didn't have enough real value to make it work. But do you think with marketplaces, e-money has a new kind of lease of life?
Absolutely, and not just with marketplaces. I see the application of e-money as much broader, because ultimately, for every single business that needs to that basically needs to place its end customer funds within its ecosystem, you need funds custody, right? You need to have a way of keeping all of these funds safely and securely, and of automating payments between those consumers in quite an easy manner. So, we're not just talking about payments acceptance here, we're talking about placing customers' funds very much into your ecosystem. And so just to make that a bit less abstract, because I know it can sound quite abstract, other applications are fintechs, right, or investment products. Good examples are that there are a few really cool ones in London where for every transaction that you spend on a daily basis, it rounds it up and places the delta into an e-money pot that acts as a savings pot. So investment products like these absolutely require e-money and other fintechs of the like. And then there is also another very interesting market for e-money, and that is cryptocurrency businesses that are looking for crypto to fiat interoperability. I think we're past that moment where everyone thought that Bitcoin and crypto is going to take over traditional finance. That may well happen in 50 years or 100 years' time. But today, I do think people are starting to realize the real value is in that interoperability and having easy ways of converting fiat to crypto and crypto to fiat. And here, if you give end customers an e-money account that they can place funds into, and then allow them to purchase crypto by just sending you an A2A transaction, you've got a really neat solution that has great customer experience, that is a regulated solution for the crypto market, and really solves that interoperability question. So I do think that the application of e-money, or rather that e-money has a lot of applications, and a lot of these are fueled by recent change and innovation.
Right. Okay, Jake, I mean, e-money, I know you're a fan of recurring payments and the subscription model, but would you consider some of these other models? What's your view on some of the alternatives?
Yeah, so I think you could take micropayments, for example, and think of that as potentially one-off installment or even e-commerce initial payments, right? So we, in some markets or not others, will process our initial payments at the point of sale, as well as we offer add-ons to our boxes. So you can purchase a premium meal or special ingredients, and this would be a smaller purchase relative to your normal box recurring payment. So we either process these as one-off payments, as subsequent recurring payments, or in sometimes bundled together. So I see that kind of way as micropayments or individual payments could complement the model of a recurring business. When it comes to e-money or kind of stored balance accounts, I think that ultimately customers use what they prefer, right? So be it something like a PayPal, where customers might have a stored balance, or similarly pay with Venmo, they might use to pay with us as an end merchant. Similarly, what we could do is look to complement our existing structure by creating a credit account or a cash account, if you will. So Uber recently rolled out their Uber Cash product, and lots to go into that, but definitely something for us to consider as well.
Okay. And do you keep a balance? And you probably know these figures. I don't know if you can share them between the kind of traditional payment card schemes you're dealing with versus alternative payment schemes.
What I can share is they certainly have grown over time. So, while we overwhelmingly process cards in the United States and in Canada, we also have a significant share from Zofort in Germany, and Bancontact, and Ideal, and things like that. But specifically for alternative payment methods, or the really hot APMs in the U.S., have seen their share steadily increasing over time.
Right. Christophe, what's your experience on that? Are you getting swamped by the number of different payment methods that your marketplace customers are wanting to support?
Yeah, and I've got a figure for that. Since 2015, the number of payment online and on mobile done with alternative payment is higher in the world than payment done with bank cards. Okay, so WeChat and Alipay is mainly part of it, and PayPal, and you could also argue that PayPal is hitting bank cards as well when you do a PayPal transaction. But still, there are more alternative payment transactions done in the e-com world than with bank cards since 2015. Okay, first. And then you mentioned a few different types of alternative payment, including micropayment. You named wallet. And there are also a few other types of payment that are asked by our clients, like payment by installment. You want to pay in 2 or 3 times.
Yeah.
Very convenient if you have a high value basket, like Klarna or Mash. That is inside the exhibit, or I don't know, CTLM in France. You also have some prepaid payments. You mentioned it with prepaid payments that could be loaded on a wallet for a merchant, but you also have a lot of gift cards, vouchers that exist. And as an example, in Brazil or even in Portugal, many people would come with cash, give cash to a cashier, get a code number to pay online. Because in those countries, or at least in Brazil, people don't have a lot of bank cards or bank accounts. Okay, so type of prepaid payment that exists a lot as well, and that are very used in the world. And then, of course, in Africa, they all switched from cash immediately to mobile, and over there it's a mix of micro and wallet, micro payment and wallet payment, but everything is done with mobile in Africa. So payment by installment, wallet, mobile, prepaid payments, cryptocurrency, these are a lot, and instant payment that are coming over as well. Bank-to-bank type of payment. So it's crazy how many payment exist in the world, and the trend is
going upwards.
Going up, yeah.
Yeah. Oh, and to be honest, if you think of the complexity we're getting from diverse payment methods, and then you look at the increasing weight of regulatory change, it's probably a little bit depressing sometimes. But we didn't have that much mention on 3D Secure. We did have a lot of it in our previous session. But what about you guys? Are you concerned about GDPR, about PSD2? Mike, are these things keeping you up at night?
Get the good questions.
Is that concerned?
I think that they're clearly things we need to be aware of and have a position on. But for me, they're just market dynamics, other things to consider alongside all the other challenges and opportunities that we have. So for sure, we're taking care of them and getting our position sorted out for those. But yeah, I think there's other things as well to keep
not losing sleep over it
as well. Yeah, exactly. Yeah.
Well, what about you, Anna? Because you did actually mention PSD2, and I think regulation is quite high on your radar, no?
Absolutely. I mean, in many ways, we've been very fortunate because regulation actually played into our favor. Due to PSD2, there's even more need for our clients to come to us, and that's really, I guess, quite unique to really be so happy about regulatory change. But other than that, I would say, from my perspective, the most challenging changes in regulation have been the changes to the money laundering directive. So we've had 4 MLD, now 5 MLD is coming up. Who knows when 6 MLD will be discussed, but it's absolutely constant, and it constantly introduces changes to customer due diligence, to what is acceptable to be done under simplified due diligence, to what needs to be done using full due diligence, and obviously as we discussed and as Chris mentioned, we need to do KYC on each and every merchant on a marketplace. So that KYC needs to be done in a highly automated and a highly frictionless way. So we need to build the systems around that, and kind of try to tier due diligence as best as we can. But if regulation keeps introducing changes and keeps making, decreasing limits in terms of simplified due diligence, there's just a lot to keep up, and it really goes against that frictionless experience that we want to deliver.
Yeah, of course. Jake, do you have to employ professional compliance managers now in your business just to focus on these issues?
So we are certainly professional legal and compliance team. I will say with regards to PSD2 and 3DS, we had panelists that spoke about that earlier. It's our customers at the end of the day, as a merchant, that are those whose journeys are going to be affected. So I think the positive side of that is the frictionless experience that different PSPs and the schemes have enabled with 3DS 2.0. And the last piece is, you mentioned earlier on the pain in payments, right? And so for any merchant, the pain is fraud and disputes, right? And so where scheme permitting, where 3DS 2.0 offers liability shift for disputes, is often something that will be very beneficial to us as a merchant.
Right. I can believe it. Manja, from your side, did compliance issues pop up in some of the research that you were doing in the potential for micropayments?
I did not research any compliance issues. The only regulation, if you can put it that way, for my research study of micropayments was like the consumer. What does the consumer require? So you look really into the customer needs, but compliance was not really an issue, no.
Okay, interesting. Christophe, I'm sure compliance is definitely an issue for... Tell us more.
Yeah, that's. I have to remind something, because sometimes compliance can be considered as a constraint,
right,
from Europe and all the states. But actually, if we have this compliance, this is at the end to enable some player like us to improve services, to create services around money. And long time ago, this was limited to only banks that could do that. And thanks to compliance and regulation, then thanks to PSD2 and a few other law, now some players that are not banks can play with the funds and create some amazing services that we have today. So we should not consider always compliance as a constraint that is imposed by regulators, but that is something that enables new players to offer new services. That's the way I perceive it. Okay, and enable new players to do new services and keep everything secured at the same time. That's what compliance and regulation is all about. So yes, of course, marketplace, that is a new way to sell product. That's amazing how this works well, but at the same time there are some risks. So regulation is mandatory if we don't want to see some loss of money everywhere in the world, loss of money everywhere in the world that would happen if everything was not clearly and carefully regulated.
That's a great view. I mean, I think we tend to see compliance as a burden, but you've definitely highlighted the opportunity. So thank you for that. We're running a little bit behind time, but I'd just like to open up to the floor. Do we have some questions? Yes, please.
Yeah, have a marketplace company based in Hungary, which focuses on collectors. It's called Collectorism, and we bring collectors and people who want to sell their stuff together. There are some companies, but it's more a P2P type of marketplace. Now, we have a PayPal marketplace. And that's the only thing that we use. So I'm actively looking for an alternative to give people a wider choice. The thing is that maybe in other countries in Eastern Europe as well, people are a bit, not suspicious, but uncomfortable with PayPal, signing up and all the rest of it. They want something more simple. My question to you is that, and I'd like to speak to yourself and Christophe afterwards about maybe deeper discussions, but one of the things in my mind is that PayPal gives customer protection. And if I have a P2P site, you know, a collector is buying something that somebody is advertising. PayPal says if it's not delivered or if it's something completely different, they give a type of insurance and coverage. If we move away from PayPal, and this is something that nobody has discussed, is what is the comfort for the customer? Because I don't want to set up a large customer service department, which is big cost because I have not too much money. I don't have the resources to set up a customer service department within the company, and this is a service that was provided to me actually by PayPal. So what would you suggest? What's your experience in that area?
One thing that instantly comes to mind is the use of escrow. So if you want to give your customers that extra protection, one functionality that some marketplace players, including ourselves, offer is escrow, right? If I want to purchase an antique book worth £200, whatever it is, I place those funds into an escrow transaction, and there's an agreement that only once the seller has said, I have shipped the book, and only once I confirm that I've received the book, those funds will actually be released. And the way that we go about escrow is actually by trying to not just automate the happy case or the very unhappy case where all £100 need to go back to the buyer, but we actually say, you know what, there can be cases in between. There can be an instance where something was delivered, but it was delivered late, or something was delivered and it was delivered in a damaged way. So together with our clients, we then define what the payment outcomes need to be for each and every one of that escrow scenario. And then if I, as a customer, click, I have received it, but it was late, and obviously the person sending has said, I've sent it, then 80% go to the seller and 20% go back to me as the buyer. So that offers protection for everyone involved, and because it's automated, it wouldn't cause a lot of operational burden for you.
And we could say also that Visa, MasterCard offer protection. I mean, when a buyer that uses Visa, MasterCard has not received the product or the service, he's going to ask for a chargeback. Happens. So a user that is using Visa, MasterCard, and that's a protection of Visa, MasterCard, they enable chargeback, a bit like PayPal does it, but PayPal do a good marketing around it. But Visa, MasterCard enable the same type of security. Okay? And it's not because, by the way, there is a chargeback. If there is a 3DS type of payment, then we mentioned the liability shift. So if there is a 3DS payment, there could be a chargeback requested by the buyer, and still the responsibility of this will go to the bank, of the buyer, and not your bank. Okay, so yes, you can switch from PayPal to bank cards. You could also switch from PayPal to some Eastern country wallet that exists in Europe. There are many of them, Pay24 and a few other ones, that could offer some type of, nothing against PayPal, but that could offer some type of security for you and for the buyer.
Right. Any other questions from the audience? We have a secondary question? No? No? Well, in that case, I'd like to thank you all for staying through the session. I'd also like to thank, of course, our speakers and panelists. thank you very much, and wish you all a very good evening. Thank you.
Thank you.